What's good, everybody? Um, I'm right here, just on the charts, man. I've been on the charts for about good 4 to 5 hours, probably even six. But basically, I just wanted to make a short video of how to be more consistent in the market. Recently, I've been in Iraq, and I had a lot of time, downtime to try to figure this stuff out. I wanted to figure out how to be more consistent. From some of my previous videos with the I flats and I50s. A lot of people did benefit from it. It does work, but I wanted to be more consistent. There's some days where it doesn't work, or some of the levels get flown by, hitting stop loss and then pushing in the direction that we was trying to trade in. So basically, I have sat behind the screen for hours after hours, back testing, applying, back testing, and applying more stuff, and truly feel like I have discovered how most of these other big time traders are making profits consistently every day, which is what we all would like to do. So today I'm going to share that information with you and break down their strategy, which I wouldn't even call it their strategy. It's nothing but straight price action at the charts, especially as you see I'm on TradingView. It's nothing but the charts that give you your risk to reward and also your TPs and stop losses. Um, So yeah, I'm giving you all this information today for free. It's currently 1:35 in the morning. I am kind of sleepy, kind of dozing off here, but I'm gonna try to make a quick video to explain this stuff to you for free. I truly do not want to mentor. I just want to give you guys free information. I like being on the charts. I like making my own money. I don't like mentoring and trying to keep up with other people, but I do give this stuff out for free. So enjoy it, take notes, and hopefully it would change your trading career. All right, let's get started. So now that we getting started, the first thing I want you guys to see are these numbers out to the right on TradingView. If you scroll up and down, you see these numbers changing, right? You got some 20s, 60s, 80s, you got the 50s, the flats, and now you got the whole numbers. But what truly matters is these numbers here. The 960, 920, 880, 840. And what I draw out in these areas here are the numbers that truly matter. As we know, the 33s is going to be all of them. As you look to the right, all of these say 33. So the 33s mainly don't matter. The first two digits don't matter. But the third and the fourth digit means something. And how I like to look at it is like this. Whenever we have a odd number, it has to be followed by even. And whenever we have that odd number, it has to be followed by 6 or 2. So it could be 9, 6, 9, 2. It could be 7, 6, 7, 2, 5, 6, 5, 2, 3, 6, 3, 2, 1, 6, 1, 2, right? That's only when we get the sixes and the twos are only followed by odd numbers, right? See it over here, the 3 threes doesn't matter, so we have 9, 6, 9, 2. Down here, we have an even number, which is 6. It is also followed by an even number. But that even number after the first even number would be 8. And excuse me, this is wrong. It's supposed to be 4. Yeah, I'm tired. So the first even number needs to be followed by another even number. You can call it the double evens. So 6, 8, 6, 4. It can be 4, 8, 4, 4, or 2, 8, 2, 4. The first two digits doesn't matter. The second digits, which is the 6 and the 8, matter. And 6, 4. Whenever we do have though that first even number, it have to be followed by an 8 or a 4. And we will put horizontal lines, right? We do something like this. So say for instance, if this was the 6, 8, 6, 8, which it is, we would put boom, a horizontal line on it, right? Boom. 6, 4, 0, boom. So now this would be our area. This would basically be our support and resistance area. Same up here. If we have an odd, we place a line on that odd 20 or odd 60, right? So I just wanted you guys to remember this because this is the most important price action. All right. Matter of fact, I'm gonna just go ahead and show you guys. I'm gonna delete this real quick. I'll delete these, delete that. I'm gonna give you guys the real sauce. This price action that I'm showing you, which will be off to this right, is already on the charts. A lot of new traders, when a lot of big time traders, you'll see them, they usually have their charts clear like this, right? Boom. It look clear. You don't really see a lot of lines, but what they did is go down, hold on, go down to settings, and it says grid lines. They got it on none right now because they already practiced this stuff over and over for years after years. You can turn on the vertical and the horizontal line, which will look like that, right? Or what I like to do is just keep on just the horizontal line from my support and resistance area. I don't really care about the vertical line. Now I know I would want to what? Go to some of those numbers, right? These are the 50s. You see it says 650. That's not our number. Keep going, boom. Here's our number, right? We have even 6 followed by the 4, 6, 4, 6, 8. Odd 7, 2, 7, 6. And then hold on. It went back to that 800 flat. Even 8, 4, 8, 8. Odd 9, 2, 9, 6. And all I want to do now is basically play a support and resistance at these areas, but I'm gonna show you that later on the M1. And for now, I'm gonna turn the actual horizontal line off. Hold on, I didn't even turn it off. I'm gonna turn the horizontal line to none for now because I'm gonna show you what happens every day at 9:30. So remember these numbers, right? We'll come back to it. The next thing I want to show you guys is what happened on the 1 minute chart. We want to be looking at the 1 minute candlesticks around this 9:30 a.m. And what I like to do is not trade the first 4 minutes. The first, I would say 3 to 4 minutes. I want to see at least 1, 2, 3 candlesticks. The first candlestick would be this one. Say for instance, if we was looking at a bullish candlestick exactly at 9:30, we let that one close, right? This is the 9:30 candlestick. Let it close. And what we want to do is find our we want to go find our rectangle, and we want to put a rectangle up under the opening of that 9:30 a.m. Eastern 1 minute candle, right? So now we know we want to have our, I don't even want to call it support resistance. We just want to see or recognize which direction that 9:30 had pushed. So for instance, this one pushed bullish. So now we put it up under. right? And it'd be the same with bearish. This one pushed bearish. So now we put the horizontal line at the opening start of that 930 candle. And like I said, we don't want to trade the first 3 to 4 or 5 minutes. But what I have noticed is that every time the market like this will push bullish, first it would sometimes take off, just go push high. You know how 930 goes crazy on US30. It will push hard, find an area of resistance, and it always come back to the zone that we placed up under that 9:30 a.m. It usually, I would say 8 out of 10 times, it will show you a move, a fake, find an area of resistance, come back, and even sometimes give you this retest area before it comes back to either retest that up under that bottom, that 930 candle, or most of the times it would go and spike below it, right? So it would push high, come back down, show a break and retest, and then it would actually go either retest this area up under this 930, or it would continue to push, find an area of support, then go back bullish because that 930 went bullish. Same with down here. It started as bearish. So we could say the first 3 candles went bearish, 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 bearish. We know it have to pull back to the same area of where it opened and push started from, like basically pushed off from at that 930. That's the whole point of drawing this area as soon as this 930 candlestick closed. Let it go find support somewhere down there. And that somewhere down there, like these orange lines that I'm showing you, or have drawn up, you see they don't have the price on them. I took it off because these orange lines will be our price action above here. It would be the 640s or the 680s, or it would be the 920s or the 960s. So imagine these orange lines being that area, right? So remember this, if we got a bearish candle, we put the horizontal box at the opening of the 930 1 minute candlestick. We are looking at everything on a 1 minute. All the people in Wall Street, they're trading off the 1 minutes. Everything is happening within seconds. Quick, quick, quick. You can trade using, other analysis, big time frame analysis on US30. But what I noticed that you just need to catch a move in US30. It's hard to catch a full out big 30K, 50K pip move on US30 because it always push, come back, retest, push, go back, retest. So this that I'm going to show you here in a second is way more consistent when it comes to profit. And if we can get this down, then we can up our lots and make a living off of being consistent, just using this strategy every day. So basically, if it's a bullish, we know it has to come back to the opening. If it's a bearish, it has to pull back to the opening. All right. The last thing that we got to discuss before actually going to look at it is look at our main goal, right? So it says our main goal is to become more consistent with trading. Hold on. Our main goal to being more consistent with trading is having a planned risk to reward, R&R, set in stone before placing a trade. Allow the trade to play out, then review / backtest results to learn and grow. So basically what I'm saying is, in order to be more consistent in the charts, you have to have a planned risk to reward. You have to know, okay, I want to risk 5 to gain 10, or I want to risk 20 to gain 40. I like to do 1-on-1s because you try to gain a lot of people get greedy. You want to look for 1-3s, 1-4s, 1-5s. And trading US30, it moves too quick. You're gonna burn yourself out, especially if you're using a close stop loss. I would say anything up under 3,000 pip stop loss, or however y'all want to say it, 300 pip stop loss or 30 pip stop loss. Anything under that is very, very close and is very, very tight. What I like to use is this. This stuff over here to the right. Basically, I have some rules, and when it comes to the math portion of funded accounts, I'm basically giving you the sauce. Funded account math. First rule, only risk 1% or 2% of your funded account per trade. Second rule, use the risk to reward that's built in. Basically, when I say that's built, that's basically talking about those numbers that was off to the right. I'm gonna show you later. Basically, whenever we break one of those levels, we will put our stop loss at the next level or pin our TP 2 levels below. I'm gonna show you guys. But like you see right here, I like to risk 4 to gain 8, which is basically the 2-to-1 R&R, right? Looking at the math with the funded account, some people be like, what lot size should I be using? I have the 100K account. If we wanted to risk 1% per trade, that would be $1,000 USD. If we wanted to risk 2% per trade, that'd be $2,000. And based off this risk 4 to gain 8 or a 2-to-1, the proper lot size that we use, if we do have a 100K account, we use a 0.25, which will put us at that $1,000 USD mark if we wanted to risk 1%. We'll use a 0.50, which would be $2,000 if we wanted to risk that 2% of the account, right? Same thing down here with the 200K account. If we want to risk 1%, it would still be 2,000 USD. If we wanted to risk the 2%, it would be 4K. Proper lot size for risking 1% of the 200K, it'll be a 0.50. And then the lot size, if we wanted to risk 2%, would be a standard lot. But you don't have to truly use a 0.1. You can use anywhere between a 0.50 to a 1 lot, basically, if you wanted to risk less than 2%, right? So basically, let's get into it. I'm gonna show you guys examples of what I'm talking about. I want to now go to the 1-minute chart. Boom, boom, boom. What I'm gonna do also is turn back on our horizontal marks. Boom. And I'm gonna zoom in. I know some of you guys might say, what are these indicators? All I do is have kill zone. If you wanna put it on your charts, all the kill zone does is show me basically London. It shows me Asian and London and then New York time, basically the changeover in between. And then this is basically New York, as you see at the bottom, 4 o'clock all the way to 12 o'clock. And then the whites in between would be that 12 o'clock to basically close to the next day, basically. So I like to use it because I know that this area, this tan area, or darkish brown, lightest brown, whatever you want to call it, tan, is my it's my New York time. So that's when I want to be on the charts, and that's when I want to start looking at the strategy. So let's look at it. Let's dive in it. As you see up under it, I kind of drew in the picture of what the pattern looks like. So all I did is, first I want to do this. I want to go find our numbers. I want to see an odd with an even, which is 5-2, perfect. 5-6 is good. So all I'm doing now is kind of like zooming in just a little bit As you see, it changed. It went to 25s, 50s, 75s. I don't want that. I want to go back to, boom, 5.2, 5.6, 600, 6.4, 6.8. So I know I'm good. Now I'm on a 1 minute chart, and I don't want to do it with this horizontal line. Remember, I want to go find 930. Boom, 930 is this candlestick right here. I'm going to slide this horizontal back just so I can see this 930 opening. Let's see if we can zoom in a little bit more. Nope, I'm going to go back. All right, so we're back on it. So now I know this candlestick, this bearish candlestick right here is my 9:30 a.m. 1 minute time frame candle. We had a bearish candle, right? Boom. So since we have the bearish, I will want to put our horizontal box at the opening of it. And matter of fact, I'm just make this go all the way to the right so that way I don't have to keep extend all the way to the right. Boom. So now I know that we had a bearish 1 minute candlestick during our time of 9:30, as you see at the bottom, 9:30 a.m. Eastern time. It pushed bearish, right? Boom. So what do we know? We know that our area of 480 is above, and we know that our area of 400, and also I normally try to stay away from the whole numbers. Our area of 360 is below. And what I like to do as well, like I said, I don't like to trade the first couple of hours. I normally will wait until 9:35. Sometimes, depending on where we at, 9:34 is the earliest that I would ever get in a trade. 9:35 is perfect. So during the time of 9:35, we started showing resistance at our area of 480. Now, since we are at this resistance of 480, nothing is truly telling me to take this, right? We could have pushed off of this area and just continue to go past this 480, retest at 40, and just continue to go on a bullish run, right? What I want to do is be patient. We know that these first couple of candlesticks is going to make a move, and usually it's a fake out to grab liquidity or whatever you want to call, and those traders to call it liquidity. Go grab stop losses, blah, 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 from our previous looking to the left. It's going to take out some of these liquidity areas, whatever you want to call them. I don't really focus on it. I focus mainly on price, but I leave those first couple of candlesticks on the 1 minute alone until 9:35 at least. We had a rejection, rejection, rejection. So now in my head, I know these areas are key areas, right? I done studied it, I done seen it. I would want to wait. And this is what comes with being patient and having a little bit of understanding when it comes to structure, when it comes to overall direction. I would want to see a break under this area, which is 440, which is another one of our key areas, right? I would want to see it, and also our area of where we opened at. We got, during that open, we got a small wick to the downside. This wick is not strong enough. As we know, candlesticks on H1 usually show either a large wick to the top or a large wick to the bottom. Right now, everything above this yellow box right now would be considered a wick. So all of this stuff above this yellow box right now would be considered a wick if we was to go to the H1 time frame. I can go to it. Where is it at? So as you see, all of that was that wick inside of here on H1 on a higher time frame. So let me try to get back as soon as possible because I don't want to be on the charts too long. So as you see, I would want to let it go. Let's try to get back on our correct levels, which would be there. I would want it to go back above, create the wick, and as it pushing back, breaking up under a key level of 440, right? Because we got it even with the 440. I would want to see it break up under. And once we break up under, that's my key to go. And all I do as far as our stop loss, as you see on the stop loss, it go 40 pips to gain 80. Risk 4 to gain 8. So all I would do is grab my risk to reward. Where is it? So I want to short it because we're breaking back under this area. And once we break and retest this area, boom, my entry's there. My stop loss going to the next level, which would be this high, this last high. My first TP for a 1-on-1 would be at this level of 400, 400. But my 2-to-1 risk to reward would have to be down here for 800 at this 360 area, right? This is the trade. I put a one lot, like if I'm on a 300K account, I put a one lot here. I'm risking $4,000 to gain $8,000. Remember our risk to reward? I'm not going to go back because it's going to take me all the way back. But you remember, if we're on a 100K account, we would take this. If we wanted to risk that 1%, we take it. Our entry here on this retest. We take that entry here on this retest with a 0.25, risking $1,000 because we will put our stop loss for 40 pips. And a secret to this, you can actually like set this up to a T. You can mess with the numbers. I already have it on my where is it? We just put it in right here. So we want to go 800 and 400, 2-to-1. Boom. So now we want to get in here with that 0.25, risking 40 pips or 4,000 pips, however you want to say it, which would be $1,000 if we're using that 0.25. If we wanted to use a 0.50, we'd be risking $2,000 to gain 4. If we use that 0.25, it'd be risking $1,000 to gain 2. You know what I'm saying? If you're using a one lot, it'd be risking $4,000 to gain 8. And so on and so on. Once you start to become good, you'd be able to start to take this with a 3 lot, which a lot of these big traders, I see Limbo Raw, he does it perfection. He's great at it. He would take a 3 lot here on Nas. All the stuff that I'm showing you works on Nas as well. And he will cut down his stop loss to around 3 or so and use a 3 lot. And as it's pushing for 8,000 pips, he's making a 20K or plus, you know what I'm saying? It works. So the strategy is this: go to 9 o'clock, see what 9 o'clock gave you on the M1 strategy. I mean, on an M1 chart. Put this yellow box at the opening of that 1 minute candle. And now you'll want to see it push in a direction the first 4 to 5 candlesticks. Once 9:35 starts to happen, you just have to know what structure is. This right here is kind of like structure. We pushed up, came back down, found the level of where we started from, pushed up under it, retested it 1, 2, 3, 4. And now we want to put our stop loss right above this last high and let it push for it, profits. This is the same thing, just Boom. So now let's go look at some more. Oh shoot. Just 1 minute. Can't get it. It's tricky. So now we do the same. We have our 930 candlestick. Boom. We push down hard. We are on the right price. We push down, it came down, retested this 800 level. We know above is 840. All right. And then below will be the 760. And then up under there will be the 720. Eventually it gets so good that you won't have to plot it. But basically, if you turn on any moving average, or draw up trend lines, a lot of people are like trend lines on smaller time frames. We can see that the market is clearly falling, especially if we zoom out. It's been going all the way up for the longest. Boom. So my bias would be to look for a sell anyway, right? So, but I will want to still wait until after this 9:30 candlestick makes a move. And then what do we know? Is that we have to wait till at least 9:35 before we can actually take a good trade. So we leave this candlestick alone, leave that one alone, leave that one alone, leave that one alone. Now we know, now we can start getting into play. So my bias looking at this currently 9:35, 9:35 came. I know that I truly want to sell. But if I sell it, I would either want to take a sell here, and I could like try to take a risky sell, jumping the gun, or I can wait on a structure for something like this bearish candle to fall, retest, and when it retests, I'm now getting in right here, and I'm taking it for 80 or 8,000 pips, and that will be my entry and my exit. And all I'm doing is using these numbers up to the right as my TP area, and I'm using it as well as let me delete this real quick. I'm using it as well as my stop loss area, right? So as soon as I see this bearish momentum break up under, I'm already looking to take a sell. As soon as I see this candlestick, right, I don't mess with anything between these first 5 candlesticks. Let that move happen. Let that thing go. It pushed back in. Okay. Now I'll say I don't really want to buy, so I truly don't want it to break this 840. But I know once we break back up under this 800, I will want to see it retest. And when we retest it, my entry is here. I know I want to risk 4 to gain 8. So if I'm on a 100K account, same thing, 0.25, risking 1,000, or I can be using a 0.5, risking 2,000 to gain $4,000 a day. This happens daily, and it doesn't just happen, during this time of during this time in New York. It happens over and over and over again. These areas off to the right are well respected. Let's go look at some more. A lot of traders are trading like this, but they're not truly showing you guys what price action they're taking these trades at. All right, let's look at this one again. And this is why being patient matters. 930 is this bearish candlestick, right? I'm gonna push it back to 930, 929. So we have 930 right there. Put our horizontal box above it. Boom. 935 or 934, 935 is here in this area. Now, what do we know? That most of the time it comes back to this box. Or if this 930 doesn't give us, it first pushed bearish and it wasn't followed by any more bearish movement. It just took off to push back higher. So what do we know is that this second candle that was followed after that 930, so 931, is now creating a wick, right? Because everything that's above here is going to be a wick. All this candlesticks right here is going to be a wick on H1. Boom. So now that I know that we don't truly have a wick below, we just went bearish and came all the way back up bullish. I don't even trade these candlesticks. Why? Because it's that momentum, it's that liquidity grab, it's that whatever such and such, I want to call it order block, whatever will fulfill. Yes, it may be true, but I don't even mess with it. So I wait from 935. And now if my bias at this 935 is to sell this market, right? I would want to see what? I would want to see us break up under some of our main key areas, which would be first, I want to see a break up under 960. Boom. Or I want to see us break up under, I said 9, I meant 560 or 520, right? After 935, which would be our red horizontal line right now, we had this bearish candlestick right here. It pushed up under our 560 area. And what happened? It came back, retested our 560 area. And then what happened after that? It melted for what? Our 8 pips. It happens fast. It happens fast. And like I said, this is more of a consistent making profits every day type of strategy. It takes time. It takes practice. But it's really not a lot of practice when you just stick to the rules, right? We broke up under 560. We know that basically, and again, when 930, only reason we only trading during this 930 is because we know volume is spiking at 930. We know the market is going on a rampage, moving fast in certain directions. We leave the first 3, 4, 5 candlesticks alone. Now we make a decision. It can either continue. If it wanted to continue, it couldn't truly break back up under this 560. It would have to break, it would come back to retest this 560 and continue to go. But we broke up under it. We also don't have a wick during that open. We just took straight up to hit all these liquidities and stop losses who were in sales. Now we're pushing back up under. We retest the 560. So my entry would be boom right there. And stop loss go for TP go for 8. Same stuff. Boom. Perfect to a T. Bounce. Right? You could even try to get in here, you know what I'm saying, for a 1-on-1. My entry would have been here. Stop loss could have been up here. A 1-on-1 is still a good trade. Go back and look at some of these traders. They're not catching these big moves that we think, especially on these indexes, these big US30 moves. I would say Q Banks is probably the only person we truly seen catch, thousands and thousands of pips when it comes to US30. But everybody else or anybody else that's trading nines and a lot of others who are trading XP 500, XPX 500 or US30, they're catching small moves. They're scalping the market, scalping it, and then getting out the money. They're getting out. But what they doing is became so consistent at this to the point where they can load up big numbers at this entry, now cutting their stop loss in half, or sometimes even at 1,500. and they're gaining all these pips. And look, the market shot all the way back up, but they already won the war, right? It's the same thing with the big banks. The big banks ain't truly trading, you know. Well, I mean, I ain't gonna say they're not, 'cause who knows what they're doing, but they make a lot of more money when they're scalping and loading up a lot of, numbers as well, and catching that quick move versus putting a lot of risk and trying to hold it for a long period of time. We shouldn't truly be trying to hold trades on US30 because it's wicked. It can fall back. It retests is hard. The structure on US30 is wicked. Let's look at this one again. And sometimes you do got to see what happened during London and Asian. We've been pushing up for the longest. Boom. 930 is now starting to break. Let's go back to her. 930 was here. This candlestick, we put the square box at the opening. Boom. We retested this 970. I mean, it's 720. But do we get in there? No. Why? Because it says when it pushed back up, it was 932 at the bottom, as you see. 932. We don't want to mess with that. 935 was here. Boom. So now that we at 935, we got two options. We just had a big retest especially from this uptrend that we've been on. We can say, okay, this is just going to be a continuation. It's going to melt. Or we can do what? Wait for, when it's 935 happen, we can say, okay, we want to see either 680 get broken, or we can wait on 640 to get broken. Which one happened first? 640 got broken. So when 640 got broken, it pushed back up to retest it. Boom. My entry would have been here. And then what do? We stick to the rules. Put our stop loss at the next place for 440 pips. We'd have put our TP down at the bottom for 8. Boom. And now we just let it play. It might take some while. Look, we would have had a good 1-on-1, right? Boom, boom. Push back up, let it play. And that's why risk to reward is so important. You got to be willing to risk that 1,000, right? If we're on a 100K account, you got to be willing to risk that 1K. Here, when you have a system, let it play out. Let it play. Push the game. Let it play. Push the game. Boom. TP's hit. We are out the trade now. Sometimes you got to let this, and it took forever, almost an hour or a little bit over an hour for our TP to hit. Trust the system, trust the trade, trust the strategy. Let it play out. Let's look at some more. Let's further up. So we can look and see what was going on. We had an uptrend. Boom. Now we're starting to have a downtrend right before opening. Started trading down. Boom. And I'm not even going to keep this here because it could pull back forever. We just know now we're breaking from our uptrend momentum that was on. So let's look at it again. 930 opened up bullish. It's okay. So I'll put mine. Boom. Boom. And now it's just going bullish, bullish, bullish. So now I'm like, okay, it's pushing bullish, but I don't want to mess with it until 935. So I got two options. 935. We are pushing up into our area of 880. Below us is 840. below the 840 is 76. I'm gonna put this at 920 above. So during the time of this 935, I got options. I can say, okay, we were going up, but now we're in a downtrend. So I can say, okay, I would want to look to sell the market since we are more in a downtrend. Like I said, you can turn on moving averages as well. Let's just cut on some slight, not that. I'm try to cut on because I know I was teaching 66 moving average, which is good. This is a moving average, but I've been trying to, it's called the AMA. It hasn't worked perfectly, but I'm trying to figure it out. So that's the only reason it's um, not on the chart right now. But I'm gonna cut on the 66. I know Key used the 66 as well. Simple. Okay. So now we got a moving average. We can clearly see we're trending down. We kind of broke above it during this 935. We see that it was holding as resistance here as well. So what we could do is take our chances here at this 880. We also know the 900, which is the in-between mark, is a key area, right? From the flat. So I can say, okay, we're not going to break above this 900 area. Or what could I do? Wait on structure. Say, okay, if we can break above, break back below, retest it here, then I will take the sell, put my stop loss at 920 and let it flow. You had so many opportunities to do that. Could have got in here, hold it, hold it, hold it, broke back up under it with this bearish. Get in here, get in there, get in there, and let it flow. That's taking a more of an aggressive entry, but what else could you have done? You could have said, okay, right now we're above this 840 during the time of this 935. I want to be patient and wait for this 940. For this 840 to get broken before I take that trade. So, boom. Now I want to see 840 get broken, which you got broken right here with this bearish candlestick. Push down to 800. We retested the moving average of 66, and we also retested this 840, and we just melted. Our one stop loss go right above the high. Retested our 840 and just melted and actually pushed for more pips, right? That's a 1 and 3. Boom. But we truly just want to catch 2 to 1s and just be more consistent in the market when it comes to those. So that's just a little bit of what I've been saying. You go back, use these numbers over and over again. They're so clean. You can add moving averages to it. You keep track of the structure areas of how it made boom, 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 like a little head and shoulder, a little bit of action, and melt it, boom, right? It's just a matter of going back and practicing. The more you practice, the more you get better at it. But all I want you guys to see is these key numbers, these key areas is what's truly important. And what a lot of traders don't show you are these areas that are already plotted on the charts. Most of them do not have these horizontal lines. Most of their charts will look something similar to this. And what they would do is not have most of the stuff plotted. They would go something like this. They won't even have this because they already know that the 9 o'clock is already there. And what they would do is do something like this. they know that above here would be somewhere around this 920 area, but instead of putting it exactly at this 920, they would just try to move it closer to structure areas from what was done in the past. We have this area here. Boom. We had this area here. Boom. We had the retest of this area here. Boom. And then we had some more retests of this actual 920 area. So what another trader will show you is this. Instead of putting it at exactly at the 920 trade or level, right, which was still held as resistance, turned to support, they will move it up to throw the numbers out to where you're not even able to truly understand those levels because they don't have the true horizontal lines for you to keep up with it. They will show you something as far as something like this, where it's at now 931, one whole time the true number they're actually looking at will be the 920. See what I'm saying? So it'll actually be 920, but they're just, oh, look, bounce, bounce, bounce. Now we would say 930 or 931, 932 area. We will take a still, look how clean it hit that 931, but most of the time it would go to just that 930. Most of the time it would go to that 920, right? And melt. You know what I'm saying? Um, that's all that I want to show you guys. We can go over this all day long, but yeah, go back and practice it, man. Go back and practice it, and truly practice it only during the time of volatility, which would be that 930, right? Because you want to catch a lot of moves. And like I said, whenever you get good at it, then you can turn off the horizontal help. I got it on horizontal only. I don't really need the vertical. And how you do is scroll. We are at the 10s. This is not it. Right now we are at 20s. That's not it. Now we are at the 25s. That's not it. Oh, that's it. Boom. So now I can just start plotting these and see what happened. Look how strong these areas are. Support, 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 resistance, resistance. And every time it shows support and resistance, it gives you that opportunity to place. You just have to be more consistent and be realistic with yourself. Risk this. Boom. To gain, you can do one-on-ones all day. Boom. But I won't do it too many times because you have some times where it do reverse. But after it's pushed and you're, pushed in profit for so long, move stop loss to break even, right? Especially if it push for a one-on-one, why get back profits? Here's another good trade. Pushed up to 920. Sell. Stop loss go here. TP go where? 8. Boom. Even if you missed it, it broke up under, came back, broke up under, came back, retested, sell. Boom. That's $8,000. Or that's $4,000 using a 0.50. Or that's $2,000 using a 0.25. These are the moves that we want to take on US30 or ND or any index, because if you try to hold moves for too long, it always reverse. US30 is wicked, right? You can't hold it for too long because everything reverses super fast. Look at all this up and down. These are moves that we could have been catching. Look, level here, that level. Came back to that level, could have showed it again at this level. and then went back to this level. But look how it pushed back up. Like US30 is wicked, but we can be catching these level to levels in between areas for 8,000 pips, which would be $8,000 eventually once you start to have a bigger lot size. Or it can be $4,000, which is still great bread. Nobody's paying us that. Just go back and retest it. And if you guys like it, leave a comment below. And I'll see you soon. It is now 2:30 in the morning, and I'm done with the charts for now. I might be done for the whole week. I didn't figure this out. Now I'm gonna just go back and continue to apply it, and eventually start seeing the consistency that I want to see when it comes to trading US30. So God bless you all. If you like it, share it. If you can, tag me in it on Instagram. My name is CEO Mur 2.0, I believe. You can hit me up on there because I'm on there actively every day. I know a lot of people reach out to me on like Facebook. I barely get on Facebook. Reach out to me on other platforms where I'm not truly on there every day. I do get a lot of people still reaching out to me, telling me how much they appreciate me for the other strategies as far as the I-50s or um, basically the previous videos on YouTube, but I feel like this will be more consistent for those who are looking for more consistency when it comes to trading US30 in the market. So hope you enjoy. God bless you all and continue to kill the market. I see you.